Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Thursday, April the 8th, 2010. Before we get started today, let me tell you the news on our full access memberships. We've been selling them at $145 a year. That's a steal of a deal. That's also a sale. Basically, it's coming to a close. We're going to sell 10 more memberships at $145 a year, and then we're going to raise our price for those who join after that time. So if you want to get in at that great steal of a deal price, go ahead, go to our website, sign up, pay the $145 for the full year, and boom, you're in. It's not a subscription, nothing like that. So it's really simple, really good deal. Okay, let's look at today's free alert. Ticker symbol DNR. We have a short, of course, because our market's overbought. And all of the signals here on the technical you need to be watching are overbought as well. Okay, you get the overbought condition of the slow stotch. And we just had the inverted hammer signal on, what was it, Wednesday. So today's activity, though it made a little hammer formation, we still want to be watching this inverted hammer above that, because you've had to run up from major support. Even if you call this major support, which I don't, but even if you did, you're still extended from that. So a hammer that forms on the top of a run isn't the same thing as a hammer that's pulled. Like, for example, if you pull back and you form a hammer, that's a good sign. But when you're forming them at the top like this, okay, it doesn't mean anything to you. And we revert back to looking at the inverted hammer, which are important to see at the tops, okay? That's what you want to see. There, you've got one over here, all right? And then next to it is a hammer that doesn't mean anything. All right, so moving on down, we have the big old gap that needs to be filled down here. I'm sure you've got a few more in this chart as well, right here. So anyway, let's move on down here. You've got the overbought condition of the RSI. Remember, the RSI is a major overbought signal. We definitely want to be paying attention to that. There she is. All right, got to short that guy. That's my take on that. How would you stop the guy out? Again, the two methods we'll discuss on this website and our free alerts are always the same. You can place a stop at the previous high, which in this case would be yesterday's high candlestick. So 1 cent above the previous high, 1848, so your stop would be 1849. The problem is, if you do that, any little blip to the upside could get you stopped out before she pulls back anyway. So another method would be to use a 5, 8, or 10% stop, trailing stop kind of thing. Okay, that's how you could use that. All right, that's our free alert for you today. It is a short, and the recommended entry is today's close of 1797 or higher if at all possible. Now, before we wrap this up, I want to show you another alert we issued a couple days ago. Let's see, who was it? AEO, I think. American Eagle Outfitters. Yes, that was her. We'll bring up the chart there. Back on this day, we issued a short alert on this stock. Okay, we told you the same thing. Could use a previous high as your stop, but the potential for being stopped out on any little move to the upside was there, and so we recommended it was better to use a 10% stop than the previous high. And if you look at this right quick, you can see, yes, had you used a stop at the previous high, you were stopped out before she ended up selling off anyway. That's why I keep saying that over and over. It's not always this way, but when the markets are making new highs, you kind of look for that to happen on your individual charts, and that's why we've been kind of throwing out that extra. By the way, you could use a 10% stop and not get stopped out. See, if you entered this guy at 19 bucks a share, you were not stopped out at 1964. All right, and then the stock definitely moved lower. Very nice sell-off here. You'll notice there's really good sell volume behind that as well, and this gap is being filled basically, which of course is something we all said. Now, what I would do after that, okay, if you're a short-term trader, not a day trader, but a swing trader, what I would do after the stock has moved in favor of my call, basically is lower that stop loss limit down there, okay? That's a nice little way to ensure you're not going to give away all those gains. Let's say this stock were to keep coming down and then something were to happen, whatever, and she'd bounce back up and run much higher. I don't think it's going to happen, but let's just say that was possible. You always want to lower that stop loss limit down there and get yourself lock in some gains, okay? That's how I would do that. Regardless what you do, if you're not a full access member and you want to be one, go to the website, sign up, pay the $145 for the whole year while that's still available. Remember, we're only providing that for the next 10 people that sign up get that. After that, you're going to get the new rates for those people who don't sign up with this for the next 10. Regardless what you do, refer your friends. And if you're using our YouTube channel, hey, subscribe there and you'll get all these alerts every single day. Boom, right there in your little inbox. God bless, refer your friends, and take care.